It is time now for Better Money, and according to the Wall Street Journal, the U.S. inflation rate hit a 30-year high in October as consumer prices jumped 6.2%. So what effect does that have on people's retirement? Joel Johnson is a certified financial planner and managing partner for Johnson Brunetti Retirement and Investment Specialist, and is here now to explain. Welcome, Joel.
It's great to be back, Kara, and this is a pretty serious subject we're talking about here.
Well, it broke a lot of news when it happened, and I think that made people a little nervous about the economy, but let's talk about what inflation really does. You say, number one, you want people to know that it can erode purchasing power.
Right. If you think about what 6% inflation means, the simplest way to look at it is, hey, prices are going to go up 6% every year. That's on average. Some prices will go up more than that. So that's a lot. If you get a 6% raise, they just wiped out your raise with inflation. So it's a big issue, especially with those that are retired that live on a fixed income.
Okay. And so that's your next point, right? That inflation can have a negative effect on fixed income sources, which may be the case in retirement.
Right. So if you think about where we get fixed income from, where do we get that steady paycheck from? We might get it from interest on a CD, interest from a bank account, interest on bonds, maybe some type of insurance products that pays us regularly, Social Security. Well, what happens is when inflation kicks in, the value of those assets go down. My CD isn't worth as much if prices are going up. I put in $100,000, I get $100,000 in a year, but that $100,000 is worth 6% less. So it's a real conundrum for retirees.
Okay, so you need to develop strategies to provide guaranteed income, right?
That's correct. Guaranteed income is really important because what that does, if I have half my money in guaranteed income and half my money in the market, and the market goes down, the key to being a successful long-term investor is to not to have to sell when the market's down. So that guaranteed income allows me to count on my income. I don't have to worry about where my income's coming from, and I can leave my investments alone when times are tough.
And lastly, of course, the one thing you can control, you want to spend wisely.
Right. You've got to be careful of how you spend. I don't like budgets myself, but during inflationary times, we don't know how bad it's going to get. So we got to curtail a little bit of discretionary spending.
Okay. And you've got an offer to help people. It's inflation and your retirement. So this is free to everyone. To get the offer, you just ask, you can go to bettermoneytv.com. And I know folks are also welcome to ask you a question. You'll send them the offer and answer their questions.
Great resources in the book, and we'll answer every single email question we get.
All right. Thank you so much, Joel.
Thanks, Kara.
That's Better Money.